What's your plan for growth? How are you going to increase returns to shareholders?
We really see growth coming from a number of different sources. So one source is the mobile market. We still believe that over the next 3 to 5 years there'll be growth to be captured in the mobile market driven by smartphone penetration, but also other small pockets of growth within the whole ecosystem surrounding smartphones. We also see growth coming in pay TV. We have been very successful in growing pay TV in recent years, and we'd expect to be able to continue to grow our pay TV business as we basically offer the consumers a broader and broader range of digital TV services. We also see an opportunity to grow our presence outside Denmark, so Sweden, Norway and Finland, where we have seen significant growth, not least in 2011. We also believe we'll be able to continue to grow that business. Those would be some of the biggest growth opportunities that we're currently working on.
Would you consider growing through acquisitions?
Yes, that is part of our strategy. Is we would always be on the lookout for smaller bolt-on acquisitions that can be immediately plugged into our existing business platform. But it's also important for me to emphasize that we would only pursue these acquisitions within the confines of our stated rating policy, our dividend policy. We are certainly not going to jeopardize any of our financial policies to pursue acquisitions.
You've had a bruising price war which ended to some extent when you purchased Onfone and Telia and Telenor agreed to merge networks in Denmark. How do you see the prices in the Danish consumer market going forward, and how do you see the need for consolidation, further consolidation?
Well, the Danish market has always been a very competitive mobile market to the benefit of the Danish consumers, which is a good thing, obviously. I believe it will remain a very competitive market going forward. But you're right, there has, over the past few months, there has been some more relative stability in the market after a very sort of intense price competition that has been playing out over the past 9 months. That price competition has reduced the total profit pool in the market, inevitably so, and you could say, if you look at the Danish market being a relatively small market, I would say that there's not enough profits in the market anymore to finance and give a decent return on investment for 4 operators to build out 4 parallel networks. And when you come from that angle, I think in order for the market to be healthy long term, also to the benefit of the consumer, some kind of consolidation needs to take place. And the announced network merger between Telenor and Telia, you could say, is a step in that direction.
But does more need to be done?
I believe there could be a need for additional consolidation in order for the Danish market to really regain its health and sort of in order to make sure that there are operators who can and will finance the introduction of new technology to the Danish market.
Is the price war over?
I don't think the price war will ever completely end. I think there will always be price competition in the market. But if you look at the type of price war that we have seen during Q4 of last year and Q1 of this year, we have seen the market finding its way back to some more relatively stable price developments during the second quarter of this year. So I think price competition will always be part of the market, but it seems like we've been through an extraordinary situation which is now seems to stabilize.
How has the business changed since your private equity owners sold a bunch of their shares at the end of last year?
I think our business has developed in line with what we set out in the IPO process. We delivered on the guidance in 2010 that we basically put in the IPO materials, and we are also so far confirming our guidance for 2011, and we're working very hard to live on that guidance. So far, I believe we're very much in line with what we projected at the time of the IPO. And our guidance for 2011 remains fully intact. So I think we've delivered quite well on the IPO.
Those private equity owners still have a stake of about 60%, and the lock-up period has just expired. Have they given any indication of what they plan to do with that stake?
Well, it is obviously entirely in the hands of the private equity firms to decide how and when they are going to continue the exit. It's not for the management team of the company to really comment on that, so I'd almost ask you to direct the questions to the private equity sponsors.
Do you have any signal as to whether they would do it again, a share sale to multiple shareholders, or maybe seek an industrial buyer or something like that?
Again, it's entirely in their hands and it's not for me to comment on.
Great. Thank you very much.
Thank you.